Hello, welcome back to Financial Lit Storytelling. Today, we're learning about stocks. Let's begin. The story we'll follow is called Riding the Waves of Risk. Ethan sat on the edge of his bed, staring at his phone. Red numbers glared back at him. $1,200. His stomach churned, his hands shook. Just 2 weeks ago, he had been excited, feeling like a financial genius. Now, every number on that screen felt like a personal failure. It all began with curiosity. Ethan had heard people talk about stocks like they were magic. Buy low, sell high, get rich. That sounded too easy, too good to be true. But the idea of owning a piece of real companies, of being part of something bigger, excited him. He pictured himself as a young entrepreneur, making money while he slept. His first step was impulsive. He downloaded a brokerage app, deposited $2,000, his savings for a new gaming setup, and bought shares of a popular tech company. "I own part of Apple now," he said aloud, heart racing. He didn't know much about stocks yet, but he imagined profits rolling in, a growing pile of wealth appearing with each tick of the market. The first few days were intoxicating. Stocks climbed, his portfolio jumped to $2,400. The thrill of seeing his mini-empire grow made him giddy. But then came the first crash. A dip in tech stocks following a rumor of weaker earnings. His portfolio dropped by $800 overnight. Panic set in. "I could lose everything," he thought. The euphoric dream had turned sharp and cold. Ethan realized he needed to understand what stocks really were. He learned that stocks are shares of ownership in a company. Buying a stock meant he owned a small piece of that business. If the company performed well, made profits, innovated, expanded, his shares could increase in value. If it struggled, his shares could drop. Some companies paid dividends, a small portion of profit shared with shareholders, giving extra cash flow over time. He realized that unlike gambling, stocks represented ownership and potential growth, but with real risks. Determined to recover, Ethan spent nights reading, learning about the pros and cons of stock investing. He discovered that stocks offered high potential returns compared to savings accounts, but they also came with volatility. Prices could swing wildly, sometimes for reasons beyond the company's control. Yet, over the long term, historically, stocks tended to grow in value, a concept that thrilled him. Compound growth fascinated him. If he reinvested dividends and gains, his money could grow exponentially over time, like a snowball rolling downhill, picking up more snow with every turn. He decided to try again, but with patience this time. Instead of putting all his money into one hot stock, he diversified. He bought smaller amounts across tech, consumer goods, and energy companies. Each purchase represented a conscious choice, backed by research rather than hope. He tracked earnings reports, news headlines, and trends in industries. Slowly, he started to understand that investing was less about luck and more about awareness, strategy, and timing. At first, the progress was slow. Small gains, small losses, sometimes stagnant weeks. Ethan experienced small wins, like dividends hitting his account, or a stock he chose rebounding after a dip. He also faced small failures, an impulsive purchase of a biotech company that plummeted after a failed drug trial. Each experience taught him lessons he couldn't find in a textbook. Risk is part of the game, and understanding it helps you navigate rather than panic. One night, Ethan thought about why stocks could feel so stressful. It's not just the money, he realized. It's control, or lack of it. You can't make the market move how you want. But he also understood that he could control his response: when to buy, when to sell, and how to diversify. That mindset changed everything. Losses became data, not disasters. Gains became confirmation, not euphoria. Ethan's turning point came during a conversation with his mentor, Mr. Callahan, a retired investor. Investing, Mr. Callahan said, is like planting a garden. You can't rush growth. You plant seeds, water them, tend to them, and over time, you harvest. Some seeds fail, some flourish. But if you're consistent, you'll see results. Ethan loved that metaphor. Stocks were seeds. He wasn't just hoping for instant riches. He was planting for the future. He started tracking his portfolio like a garden journal. When he bought shares, why? And what happened over weeks and months? He noticed the power of compounding. Reinvesting dividends and small gains multiplied his returns. It wasn't magic. It was math and patience. By now, he had also learned the emotional lessons. Stocks could rise and fall without warning. He experienced fear, doubt, hope, and pride. A sudden market dip didn't ruin him. It taught him humility and patience. A small dividend or a stock recovery felt rewarding, not just financially, but emotionally, because it reflected his growing knowledge and discipline. Ethan's story also explored the pros and cons of stocks, naturally through his experience. Pros included potential for high returns, dividends, ownership in companies, and the power of compounding. Cons included volatility, emotional stress, potential for losses, and the need for research and attention. Through trial, error, and reflection, Ethan learned that investing without understanding was gambling. Investing with strategy and patience was empowerment. Months passed. Ethan's portfolio wasn't sky-high, but it was steadily growing. A tech stock he had held rebounded. Energy stocks yielded small dividends, and consumer goods stocks remained stable. He had learned diversification, research, risk management, and the patience to let compounding work. His confidence soared, not arrogance, but quiet assurance that he could navigate the market with wisdom. Walking home one evening, the winter air crisp around him, he reflected on the journey. The fear that once felt crushing had transformed into understanding. Stocks weren't scary or mystical. They were tools, mirrors reflecting choices, discipline, and strategy. He realized that each setback had taught him resilience, and each small win had reinforced his commitment to learning. Before we wrap up, let's summarize what Ethan learned. Stocks are shares of ownership in companies. They can rise or fall in value depending on company performance, market sentiment, and broader economic conditions. Stocks can pay dividends, providing extra income. Benefits include high potential returns, compounding growth, and financial empowerment. Risks include volatility, emotional stress, and potential losses. As of 2026, investing apps allow fractional shares and low fees, making stock investing more accessible. But the fundamentals, diversification, research, patience, remain crucial. Compounding over time can turn small, consistent investments into significant growth. Ethan's story shows us that stock investing is both a financial and emotional journey. Mistakes don't define you, they teach you. Losses are part of growth. Gains are rewards for patience, research, and strategy. Investing isn't about instant wealth. It's about planting seeds today for a future harvest. Over time, understanding, discipline, and patience turn fear into confidence and small investments into meaningful financial progress. Investing in stocks is about riding the waves, sometimes high, sometimes low, but always learning, adapting, and growing. The journey is as important as the destination. Do you have any experience with investing?